N. Mohanraj of LIC joins in to talk about what collections have been like. Mr. Mohanraj, morning. Thanks for joining in. First, just give us a sense of what kind of new business premium growth LIC itself has seen.
Good morning. Financial year 9-10 was a very good year for LIC, and the same trend is continuing in the first 2-3 months of the current financial year. And we also expect that by the year end, we will be in a better position when compared to corresponding period last year.
And could you just put some figures on it, sir, in terms of what the growth exactly has been and what the trend has been in the last few months?
In the last 2 months, our premium income has gone up by about 88%, and considering the huge base we are having, it is very appreciable. And this is also mainly due to some of the schemes doing very well in the market. Market has lapped up some of our schemes like Wealth Plus, and that has resulted in an increased inflow of funds to LIC.
In our previous interaction, you had indicated that LIC would probably be looking to invest about 60,000 crores in equities in specific in FY11. Given the rise you've seen in collections, would you still invest as much or more?
See, our investment in various asset classes for the year will be a little over 2 lakh crores. And anyway, we will not be investing less than 60,000 crores in equity, whether it is a secondary or primary market put together, will not be less than that.
Sir, morning. What about all this regulatory overhang which is there on the entire ULIP space? How has that impacted sales and demand for you?
In fact, I would not like to comment on the regulatory framework because I am dealing only with the investment aspect of LIC. There are many other people better qualified to talk about that. But suffice it to say, there has not been any drop in the flow of premium to LIC. In fact, it has shown in 2 months about 80 plus growth.
And can this traction continue on to the entire year, in your opinion? What is it that you're hoping to close FY11 with?
Every year, we are bringing some innovative products. In 8-9, it was Jeevan After. And in 9-10 we came with, 9-10 we came out with Wealth Plus, and we are also coming with a string of innovative products in the current financial year. And we are also trying to change our product mix between ULIP products and conventional products from the existing 65-35 to 60-40 without compromising on the growth of ULIP.
DIIs have been consistently selling though through the last month, Mr. Mohanraj. Can you give us a sense of how much LIC has already invested in the equity market of the total corpus you intend to?
As of yesterday, we have invested 9,600 crores in the equity market, and when compared to corresponding period last year, it was only 3,600 crores. That means in the span of nearly 3 months, we have pumped in a net addition of 6,000 crores.
Okay. I know you won't comment in specific on what exactly your take is on the ULIP controversy, Mr. Mohanraj, but would you say it's a fair assumption that collections may not be as strong for companies as they were in the past, primarily because some of the regulations may change, the duration for ULIPs may change?
See, these regulations are in the interest of the unit holders, and when they feel that the product is according to their liking as well as suiting their requirements, I see no reason why there should be a fall in the premium collections under ULIP.
Okay. You indicated earlier that some of your existing products are seeing strong inflows. Can you just break it up in terms of what kind of products are now beginning to see inflows and have led to this increase in premium?
See, Wealth Plus, which closed on 8th of May, during 90 days of its existence, it was a closed-ended scheme, we have collected over 11,000 crores. Of course, it was split over the last financial year as this financial year. And in this financial year itself, we got about 3,800 crores from that scheme. And another scheme, Market Plus, is also doing very well. And
what kind
besides,
of
we are
market
pushing
share
our tradition.
Please go ahead, sir.
Yeah, besides that, we are also pushing our traditional products like Jeevan, Anand, and many other conventional products in a big way.
What kind of market share does LIC hold at this point, Mr. Mohanraj, given the increase that you've seen, particularly on new business?
As on 31st March 2010, our market share has improved to 66%. And the other figures, we are yet to get it from IRDA. And without getting IRDA figure, we will not be able to comment on the market share as such. But it is a fair assumption that it has improved significantly.
So could you help us with what the ratio for the traditional products versus the ULIPs currently stands? And do you expect that to change?
No, last year the ratio was 65-35. That is 65 is ULIP, 35 will be conventional product. This year we would like to change this product mix slightly. That ULIP will be 60% and we would like to push our traditional products to 40%. Without compromising on the growth of ULIPs.
So also the single premium products have seen a big growth. Any particular reason for that?
No particular reason, because single premium product is an integral part of the marketing strategy so that we can mop up premium in a significant way.
Would it not be true to say, though, Mr. Mohanraj, that some of these group policies and traditional products that you just alluded to probably have a lesser equity exposure than the ULIP would as a product?
Yes, naturally, because when it comes to traditional products as well as group products, we have got certain mandatory investments like putting 25% in GSEC, another 25% in state government securities, another 15% in infrastructure development. But when it comes to ULIP, it is predominantly in equity market.
So in that case, what do you think you might be comfortable with in terms of an equity investment figure that LIC hopes to do in FY11?
If FY11, I am very hopeful that we will be reaching around the figure of 60,000 of last year. And if the robust flow of premium income under ULIP plans continue, we may even go beyond that.
Significantly beyond that, sir, touching 70,000 this year. How much of an improvement are you expecting to see?
See, we are just passing through only the third month of the current financial year. We will see the premium inflow, we will see the market conditions, we will see the IPO inflow, we will see the disinvestment program. And after seeing all these things, we will definitely take a major share of the offerings in the market.
Okay. One final word then on how you're feeling about the market, its valuations, and this extremely large primary market offering we're probably going to see for the rest of the financial year.
Actually, the last 80 days or so, I will say the valuation has come appreciably lower, and it is to our liking. That is also one of the reasons why we have invested an additional 6,000 crores in this period.
We'll leave it there, Mr. Mohanraj. Thanks very much for joining in today. That's LIC saying that they are confident they'll hit at least the 60,000 crore mark for the rest of this year in terms of investments, if not top that. However, sir, it would be a reasonable assumption to expect that the contribution from ULIPs is going to slip. For now, or up until now, 9,600 crores already invested in the market.